Now, Reuters has released its long-term Botswana and Namibia economic polls. For further discussion, we're joined by Ed Cropley, who's the African Investment Correspondent at Reuters. Thanks so much, Ed. It's great to see you again. So you're looking at these two Southern African economies. In general, they're regarded as good performers, but how do they compare?
They're very much in the same boat. Their currencies are both pegged in a trade-weighted basket to the rand. So they've been suffering from the steep decline in the value of their currencies in the last 2 months. That again has been suffered by South Africa. Their economies are also deeply dependent on mining. I mean, Botswana, of course, as we know, is the world's biggest producer of diamonds, with just the precious stones accounting for about 40% of government revenue. So therefore, the economic outlook over the next 2 or 3 years in Botswana is incredibly sensitive to the price of diamonds. And if you only look back to 2008, after the crash of Lehman's, and things very, very quickly filtered through into...
Let's continue talking about Botswana, because at the height of the global recession, their economy was battered. A third of their revenues were affected because the price of commodities dropped, and in particular, the price of diamonds. They shut down their mines. They needed budget support from the African Development Bank. How have things changed for them post-recession?
Well, it was a seminal moment in Botswana's independent history. Yeah, as you say, they shut mines for the first time in 4 decades, rather. And had to go and get, for the first time, they were forced into a budget deficit rather than a surplus. They had a $1.5 billion budget support loan from the African Development Bank. They were also forced to go to Beijing for assistance in financing the building of a new power station at Medupi. Since then, diamond prices have recovered, and other mineral ores that Botswana exports have also recovered. And we saw in the second quarter of this year the economy expanding by about 9%. Which is very dramatic. Part of that, of course, is the base effect from a weak performance in 12 months prior to that. But things have definitely recovered. And it's been very interesting to watch the political fallout of that as well. President Ian Khama was forced to take a very, very tough stance against public sector unions who were complaining about high inflation and food price and fuel inflation in particular, but refused to start spending more.
Let's talk about the consumer and the role of the Botswana consumer, because inflation there is rising quite sharply, and it's on the back of, as you're saying, imported fuel and food prices, but also a steep increase in electricity tariffs. So it's adding to the cost of doing business, and it's really putting a strain on the consumer. Have they got a grip on inflation? Will they have a grip on it?
Well, the central bank has been, and Botswana inflation now is at 8.6%, I think, and the central bank has a target range of 3% to 6%, which again is the same in South Africa. And I think if Jill Marcus was presented with inflation at 8.6%, she'd be doing something about it. Whereas this year, Botswana has the central bank there, which is again deeply respected, both domestically and internationally, has chosen not to take any action to tighten policy. At the moment, and one of the aspects that came up in the Reuters poll is inflation is expected to come down inside that 3 to 6% target band by the second half of next year. And given the concerns over the growth outlook, I think it would be a very, very brave central bank governor to go and start raising.
Let's talk about the situation in Namibia. Outlook for this year, 3.9% growth. As you said, it's the mining economy that's seen a shrinkage, and its global variables. What else is working against the Namibians?
Well, Namibia has also suffered 1 or 2 peculiar factors of its own, one of which was the weather. In the first half of this year, the northern parts of Namibia suffered some very, very severe flooding. As serious as flooding that occurred in 2009, which I think the World Bank at the time estimated about $600 million worth of damage, which is about 10% of GDP. And so this flooded mines, it decreased output, and therefore mineral receipts are reduced. At the same time, we've also had industrial action at several mines in Namibia that again has hit output.
Let's just get a perspective from Namibia. We're joined now by Robin Sherbourne. He's an analyst at IJG Securities at our NBC studios. Robin, we know that the central bank will be meeting tomorrow, MPC, and largely expected that rates will not be changed. Can you hear me, Robin? You seem to be having a bit of a problem hearing me.
Yeah, I can hear you now.
Okay, fantastic. Okay, so as the MPC meets tomorrow, it's largely expected rates will stay unchanged. The inflationary outlook for Namibia?
Yeah, look, certainly we're expecting inflation to rise, but rise a lot more slowly than we thought at the beginning of the year. Inflationary pressures have basically abated largely due to what's going on in the world economy and until recently, the strength of the exchange rate. So we're a lot happier about the inflation situation at the moment than we were earlier in the year. Of course, Namibia doesn't target inflation like South Africa. We target the peg, the one-to-one peg with the South African rand, which means we have to look at reserves. At the moment, they look pretty healthy. Inflation isn't rising as fast as we originally thought. Domestic growth is on the weak side, I'd say. So the story hasn't really changed since the bank maintained interest rates at 6%, the repo rate, in August. So there's not really much of a change of story there.
Robin, explain to me the wisdom of dealing with the currency peg as opposed to inflation, because you do have a very volatile South African rand, and it's really experienced a lot of pressure in recent weeks, and that would have a bearing on the Namibian dollar.
Yeah, well, you're absolutely right. But the trouble is we're an even smaller economy than South Africa. South Africa is a small economy by international standards and has a volatile currency. I think the feeling is if we went it alone, we would suffer even more of what the South Africans are suffering. Our currency would be even more volatile. So we're looking for what the economists call a nominal anchor, and that is really the rand exchange rate. And we feel that that has helped promote macroeconomic stability and certainly promote price stability. And I think the evidence for that, certainly since the South Africans introduced inflation targeting over 10 years ago, is pretty overwhelming. So I think on the whole, certainly the governor of the bank and the country's top politicians would feel this has been a force for stability, and that's really what the country needs.
All right, let's get Ed Cropley's views here. The currency peg for them is about anchoring their economy to a slightly larger economy, retaining some sense of macroeconomic stability. So even if we've seen a volatile rand, for them, it's a safer option. What does the poll suggest?
We didn't actually poll on the wisdom or not of depegging the Namibian dollar from the rand, and I think it's because it's not really an issue that anybody is considering, because so much of Namibia's trade is with South Africa, and it's the same as all the other currencies in the Southern African Customs Union. They're all effectively pegged to the rand because the majority of their imports, food imports, fuel imports, are going through South African ports, and as a result, their cost base is fundamentally in rand, and that's how they can keep a consistent peg on how they control their economies. Okay,
but we are seeing inflation rising in general across the region, largely because we're importing food and fuel. A similar story for Namibia with a very small consumer base. Is that a tenable situation, a manageable situation?
Well, I think so, because much of the economists like to call it cost push pressures, importing these extraneous factors, food and fuel, and the hope is that as your economy starts to readjust to those, then fundamentally there isn't a situation where you have domestic resources, too few domestic resources being chased by too many people. So they're just hoping that international food and fuel prices will maybe stabilise.
So what's the sentiment on Namibia then? Because as we know, it's largely a mining economy, but it's also an agriculture-based economy, and poor rains have had their bearing, and retail's seen a slight recovery, but to a large extent it's the higher percentage of the population that's spending.
That's very true. There is a consumer sector in Namibia, essentially concentrated on Windhoek. But it's not something that the economy can really rely on to say, drag it out of the doldrums. I mean, fundamentally, Namibia is driven by mining, and if mining goes down the tubes, then the country has a problem.
Okay, Robin, just your last inputs ahead of this MPC. In South Africa, we are expecting the central bank to start raising interest rates probably the second quarter of next year. That wasn't quite what was expected, but global forces have dictated that we just keep things as they are at the moment before we begin interest rate hikes and putting pressure on the consumer. Would that also be something that the Namibian central bank does, given this very strong relationship between the two economies?
Yeah, absolutely. Yeah, look, we generally follow on South Africa's coattails, although the central bank here would probably not like me to express it in those terms. But certainly, pretty much everything that's gone on in the world economy and the regional economy has suggested that interest rates will remain lower for longer. The only change to that outlook is the situation on the exchange rate, which over September moved quite dramatically, and that's partly a result of net sales by foreigners, not only of equities on JSE, but also of South African bonds for the first time since March. So things are certainly moving there because of the Eurozone crisis and the flight to to safe haven status and all the other things that we know about. So I would see interest rates staying low for quite a long period of time at the moment. Of course, a lot depends on what happens in the world economy and whether the Europeans can sort their act out. But I'm seeing interest rate rises only in the second half of next year as things stand.
All right, gentlemen, thanks for your time. Robin Sherbourne, he's with IJG Securities in Windhoek. Ed Cropley is with Thomson Reuters. Thanks so much for being here with us here today, just talking about the state of the Namibian and Botswana economy as we go forward.